M patterns and W patterns show up dozens of times a day on any chart, but only a fraction of them actually play out. The rest are traps. And when you fall into one of those traps, here's what happens. You enter on the pattern, price moves against you, your stop gets hit late, and you take a bigger loss than you should have. Double top, double bottom, everyone knows the names, but very few people actually use them correctly. That's exactly what we're fixing today. Hello, and welcome back. Today we're covering the real way to trade two of the most common reversal patterns on any chart, the double top and the double bottom. We'll go through three conditions that separate real patterns from fake ones: a confirmed breakout entry strategy, a pullback re-entry strategy, an early entry strategy, and how to handle pattern failures. Check the chapter card for the full outline, and let's get straight into it. Let's start with the structure. Double top first. Price is in an uptrend, then hits strong resistance at a certain level and forms the first peak. It pulls back, forms a low, then pushes back up to test that same resistance again. But the second time around, it can't break through either, and price comes back down. Two peaks at roughly the same level, with a trough in between. That three-point structure is what we call a double top. On a chart, it looks like the letter M. The core idea is simple. Price tried to break through the same level twice and failed both times. That's a signal that the uptrend is losing momentum. The double bottom is the exact mirror of that. Price is in a downtrend, finds support at a certain level, and forms the first low. It bounces, forms a high, then pushes back down to test that same support again. But the second time, it holds, and price pushes back up. Two lows at roughly the same level, with a peak in between. That's the double bottom. On a chart, it looks like the letter W. Same logic, opposite direction. Price tried to break below the same level twice and failed both times. That's a signal that the downtrend is losing momentum. Now here's where it gets important. Not every M or W you see on a chart is the real thing. There are three conditions that separate a valid pattern from a false one. The first is the gap between the two peaks or two lows. If the 2 points are too close together, the signal isn't reliable. You want to see at least 14 to 42 candles between them. If they're only a few candles apart, that's just short-term noise, not a real trend shift. The second condition is volume. In a double top, volume on the second peak should be around 20 to 40% lower than the first. That drop in volume shows that buying pressure is fading. If volume is actually higher on the second peak, that's a warning sign. It means buyers are still active. For the double bottom, it works in reverse. You want to see volume declining on the second low, showing that selling pressure is drying up. The third condition is the most important one: neckline confirmation. The neckline is a horizontal line drawn across the trough between the two peaks in a double top, or the peak between the two lows in a double bottom. For a double top, the pattern is only confirmed when price closes below that neckline on a candle close. For a double bottom, it's confirmed when price closes above the neckline. Entering before that happens is the most common mistake traders make. Until the neckline is confirmed, you don't have a pattern, you just have a shape. Strategy 1. Enter after the neckline breaks. We'll use the double top as the example. Wait for price to close below the neckline, then enter short. The key is volume. The breakdown should come with above average volume. A breakdown on low volume is a red flag and could be a false move. Set your stop loss just above the second peak. If price reclaims that level, the double top is invalid. Get out, no hesitation. For the target, measure the distance from the peak to the neckline and project that same distance below the neckline. For example, if the peak is at 100 and the neckline is at 85, the distance is 15. Your target would be 85 minus 15, which gives you 70. This is called the measured move. The numbers here are just for illustration. For a double bottom, everything flips. Enter long after a close above the neckline, stop loss below the second low, target based on the same measured move projected upward. Strategy 2. Wait for the pullback after the break. Still using the double top as the example. After the neckline breaks, price often pulls back up toward that level. What was support has now flipped to resistance. Wait for price to test that neckline from below, get rejected, and then enter short. If volume drops during the pullback and picks back up when price resumes lower, that adds confidence to the trade. Stop loss goes just above the neckline. If price closes back above it on a candle close, the resistance flip has failed. Exit the trade. Target is the same measured move as strategy 1. For a double bottom, wait for the pullback to the neckline after the break, confirm it holds as support, and enter long. Strategy 3. Enter early, before the pattern is confirmed. The first two strategies both wait for the neckline. That's the safer approach, but it also means you're entering later with a wider stop. This third strategy is different. You enter near the second peak or second low, before the neckline ever breaks. Higher risk, but a tighter stop and a much better risk-to-reward ratio. Here's how it works for a double top. When price approaches the level of the first peak for the second time, watch for two things. First, look for a candle that shows indecision, a doji, or anything that wicks in both directions without committing to a move. Second, check if volume is noticeably lower than it was at the first peak. If you see one or both of those signals, you can enter short right at that level. Stop loss goes just above the first peak. If price breaks through there, the double top structure is broken. Exit immediately. Set your first target at the neckline. If price breaks through the neckline with momentum, you can extend the target using the measured move. For a double bottom, apply everything in reverse. Near the second low, look for a doji or volume drop. Enter long, stop loss just below the first low, first target at the neckline. One important note on this strategy. Because you're not waiting for neckline confirmation, your stop will get hit if the pattern fails. That's part of the deal. The only way this strategy works is if you commit to the stop before you enter. One more thing before we wrap up. These patterns don't always work. There are two failure scenarios you need to know. The first is a false breakdown. Price breaks the neckline briefly, then reverses back above it. If you entered on the break without waiting for the candle to close, you get caught in that reversal. Always wait for the candle to close before you act. A wick through the neckline is not a confirmed break. The second failure is full pattern invalidation. The neckline breaks, you enter, then price comes roaring back and takes out the second peak entirely. That was never a double top to begin with. This is why the stop-loss rules from all three strategies are non-negotiable. If you don't have a stop defined before you enter, a failed pattern can turn into a serious loss. 3 checkpoints to keep in mind. No entries before the candle closes, treat volumeless breaks with suspicion, and always set your stop before entering. Use at least a 1-hour time frame for these patterns. The higher you go, 4 hours daily, the more reliable the signals become. Let's wrap up. A double top is a reversal pattern that forms when price fails to break the same high twice, signaling that the uptrend is running out of steam. A double bottom is the opposite. Price fails to break the same low twice, signaling that the downtrend is losing its grip. Trading the shape alone will get you in trouble. Always check the gap between the two peaks, watch how volume behaves, and wait for the neckline to confirm before committing. Next time, we're covering triple tops and triple bottoms, a structure that carries even more weight than what we covered today. Don't miss it. If you want more chart analysis and trading insights, join our free Telegram channel. The link is in the description. If this video helped you, a like and subscribe goes a long way. Thanks for watching.